Warren Buffett, the billionaire who kept it stupid simple. What if I told you $1,000 could turn into over $30 million without crypto, luck, or lottery tickets? That's exactly what Warren Buffett did. Here's how. In 1942, Warren Buffett bought 3 shares of a company called Geico for $1,000. At the time, Geico was a struggling company. In fact, they were so close to bankruptcy that Warren Buffett was the only one willing to invest in them. He saw an opportunity to buy low and sell high. And over the next 30 years, he did just that. But here's where things get interesting. Warren Buffett didn't have any special investment skills. Warren Buffett just held on to his stocks for the long term. And that's how he turned $1,000 into over $30 million. When Buffett hires someone, he looks for 3 things: smart, driven, honest. But if they don't have integrity, he wants them dumb and lazy. Why? Trust is more important than talent. And with that said, until next time, take care. Because a smart person with no morals will destroy you faster than a bad investment. Trust greater than talent. If you can't have the person you want someone who's not too smart so they won't outmaneuver you. You want someone who's not too ambitious so they won't screw you on the way up. You want someone who's not too talented so they whoa and be able to do a better job than you. Basically, you want someone who's not going to out anything, who's not going to outperform you because they have no interest in doing that. They're just there for the paycheck. You want someone who's not going to outwork you. You want someone who's not going to outthink you. You want someone who's not going to cause problems because they're just there for the paycheck. And today, we're going to talk about the 5 rules of money. This is part 10. There are people that are really smart that still work at the same company for 30 years without moving up, without causing any trouble. It just means that you want someone who's not so ambitious or so talented that they re-gone. Nah, try and do your job and then replace you. Rule number 1. Character beats genius. Really smart, impressive credentials. And so they put him on this project team, which was basically a death squad. Their job was to go into these businesses and find problems. And they found a lot of problems with this guy's suggestions. But what happened was they would go to the business and they would say, "Hey, we found a problem here. I need you to fix it." And the business would say, "Okay, we'll fix it." And then they would come back and they would find that the problem had been fixed. But it wasn't the problem that they had identified. It was a different problem that was actually a bigger problem. This guy was doing it on purpose, because he was trying to get ahead by making everyone else look bad. So this executive says, "You know, when we brought this guy onto the team, we had high hopes. Thought he was going to be great. But because of his lack of character, because of his lack of integrity, he ended up destroying the whole project." And that is the story that Buffett thinks of when he thinks of someone with great talent but no integrity. Now, this doesn't mean you want someone who's a moron. There is a story about this guy who asked an executive at a major corporation, and he asked talking about how they hired this new guy. So when you're hiring, when you're building your team, remember, character beats genius. Don't follow the hype. Most investors lose money because they chase trends. They look in the rearview mirror. I made money last year. I'll make more this year. Most of the stuff you see on social media is noise. People pretending they know something they don't. There are 10,000 financial influencers on social media. Ask yourself, if they really knew something that the rest of us didn't, would they be making videos about it? If you had a secret to making millions, would you tell the world for free? Stop getting sucked into the hype. Now, don't follow the crowd. Be a lone wolf. Find your own path to financial success. Or worse, my neighbor made money. I gotta jump in. It's how people get wrecked. Buffett, he watches the business, not the crowd. When everyone's freaking out, he's buying. When everyone's greedy, he's chilling. Rule no. 1 is to have patience. You need a long time horizon to make good decisions. If you only have a few years of investing under your belt, you don't know what you don't know. All you need is the willingness to learn and the discipline to stick to your plan. The best investors follow these 3 rules. They have patience. They ignore the noise. And when everyone else is freaking out, they're buying. Because they know that the market is always efficient in the long run. But in the short run, it's a roulette wheel. And the house always wins. The best investors have been doing it for decades. And rule no. 3 is to ignore the noise. By the way, you don't need a fancy degree or a trust fund. So if you want to make money in the stock market, don't follow the hype. Be a lone wolf. Warren Buffett is so good at making money that there are entire subreddits and communities on the internet dedicated to just copying him. So we did something crazy. We went through every single one of his letters to shareholders. Don't try to be somebody that you're not. If you're not a genius, don't try to act like a genius. Buffett doesn't trade. You shouldn't just go out and start buying stocks because Warren Buffett does it. But maybe you could go out and learn a little bit more about how he thinks, why he thinks it, and then apply that to your own investing strategy. He buys companies that he understands, says the internet won't change how people chew gum. So he's invested in a chewing gum company for decades, because he knows that people will always chew gum, and that business will always be around in 10, 20 years from now. So he's looking for these simple, predictable, profitable businesses that basically have a moat around them. And that's what he's buying when he buys a stock. He's buying a little piece of that business. Just invest in stuff you understand, he says. I'm no genius. I'm just a really good consumer of information. Basically, he's saying that he doesn't have some special ability. He's not a wizard. He's just really good at learning about stuff and then doing a little bit of research, okay? Which, by the way, if you're not getting value from this, hit subscribe. It's free. We went through all of them to find the best investing advice he has ever given. We've distilled it down into 3 rules that you can follow to get better at investing today. Rule no. 1 is pretty simple, but rule no. 2, and this is probably the most important one, is that you should diversify your businesses, not your investments, he says. Diversification is protection against ignorance. It makes little sense if you know what you're doing. So if you're a smart investor and you understand a business, you shouldn't just put all your eggs in that one basket. You should actually own a small piece of many different businesses, because then you reduce your risk. Now, of course, you want to do this within a certain industry, right? Like if you're investing in tech, you don't want to buy Microsoft and then Apple and then Google and then Amazon. Maybe you want to buy those 4, but then you want to throw in a couple of banks and a couple of pharmaceutical companies as well. So you still have some risk, but it's not as much risk as if you had just picked one company. And finally, rule no. 3, and this is the one that I found most interesting, is that you should buy businesses, not stocks. Of course, this isn't financial advice. So, we all want to make money in the stock market. We all want to be Warren Buffett, but we can't be Warren Buffett. But maybe we can learn from Warren Buffett. Can't make an omelet without breaking a few eggs. Buffett looks for good businesses with a competitive advantage that are trading at a fair price. He doesn't need fancy charts or indicators to make his decisions. Neither do you. Remember, investing is not about being the smartest person in the room. It's about being the most rational. Okay. Early on, Buffett looked for what he called cigar butt stocks. Companies so beat up, you could get one last puff of profit. Gross, but it worked. For a while. Eventually he realized that it's better to buy a great business at a fair price than a trash business at a discount. Don't waste your money on cheap stocks just because they're cheap. Instead, focus on buying quality businesses that have the potential to grow and provide long-term value. Rule No. 2. Don't put your eggs in one basket. Diversification is key, my friends. If you only invest in one stock or one area, you are playing a dangerous game. But if you spread your investments across different sectors, you reduce your risk. It's like having a little bit of everything in your portfolio. Here are 4 rules from Buffett. They can help us become better investors. Rule No. 1. Don't waste time trying to be clever. Rule No. 3. Don't overcomplicate things. Rule No. 4. Don't chase trash just because it's cheap. I know these rules are simple, but they're not easy to follow, especially when everyone around you is losing their mind over the latest stock tip or trading strategy. But if you can follow these basic principles, you'll be on your way to becoming a successful investor. So don't chase the latest trends. Don't fall for the hype. Stick to the basics and be patient. The stock market might not make you rich in a day, but with a long-term perspective and a disciplined approach, you can build wealth over time. You can't be an overnight success if you aren't willing to be a one-trick pony. There's a famous quote that reads, "He who has a why can bear almost any how." When you have a strong enough reason for doing something, it doesn't matter how hard it gets. You just got to do it. Warren Buffett does it better than anybody else. This is the 5th rule we're going to talk about from Warren Buffett's book, and it's probably the most important one. Rule number 5. Stay in your lane. Buffett calls it his circle of competence. If he doesn't understand a business, he skips it. He's not trying to get rich off hype stocks or industries he can't explain. He focuses where he has an edge, and that's why he wins. It's amazing. So pick up a copy and start learning from the best. And if you want to learn more about investing in general, stay tuned for more videos. I'll see you guys next time. He passed on billions because he didn't understand tech. If the answer is no, then don't do it. It's as simple as that. But when he did understand it, he went all in. It's easy to get caught up in the excitement of a new industry or a hyped-up stock. It's human nature to want to be a part of the next big thing, but it's also the path to ruin. When you invest in something you don't understand, you're just gambling. It's pure speculation. And the house always wins in the long run. Buffett understood this, which is why he avoided tech. Sure, he could have made a lot of money if he invested in Apple early on, but he didn't understand the business. You need to understand the market, the properties, the numbers, the area, the season. You need to have an edge. And if you don't have one, you shouldn't be investing. He didn't want to bet against it, but he wasn't buying it until he saw the edge. Then, when the opportunity presented itself, he went all in. The same is true with investing in real estate. I know this sounds boring, but this is the key to long-term success. Find your lane and stick to it. Don't chase the hot stocks or the latest trends. Invest in what you know. If you're good at it, then you can make a lot of money. If you're not, then you should stay away from it. So before you invest in anything, ask yourself, do I really understand this? If you want to learn more about Warren Buffett, I highly recommend reading this book. You'd be wise to learn from these 7 rules of money. And the last one might surprise you. Rule No. 1. Don't save, spend. Buffett was never really a saver. He understood that saving money is a form of investing in the status quo. When you're an employee, you get paid to take an idea from the owner's mind to the market. So you're literally taking someone else's wealth and growing it. Buffett recognized this early on and sought out opportunities where he could be an owner, not just an employee. And that's how he built his empire. And since he believed his ability to grow his wealth was directly tied to his ability to grow his mind, He spent freely on books, education, and self-improvement. This is probably the most counterintuitive piece of advice on our list. We hope you've enjoyed this video, and we'll see you in the next one. Thanks for watching. See you next time. But Buffett is a big believer in slowing down and taking your time to make decisions. He says that the biggest mistake investors make is buying into something just because it's popular or everyone else is doing it. He even said the best investment you can make is in yourself. Rule No. 2. Think like an owner. Rule No. 3. Never hold on to. Buffett has often said that he doesn't buy into the idea of diversification being the ultimate key to success. He focuses on finding undervalued companies with strong fundamentals and holds them for the long term. This means that when he buys a stock, he doesn't panic sell because the price goes down or the market goes against it. Rule number 4. Know your circle. Buffett famously said, "If you want to know who a person really is, look at the friends they keep." He understands that the people you surround yourself with will either inspire you to greatness or hold you back. Buffett says his biggest mistakes weren't the things he did, it was the things he didn't do. He knew he should have invested in Fannie Mae decades ago, but he passed it up and it cost him billions. Lesson. If a big opportunity lands in your lap and you know it's right, don't hesitate. That's why he's carefully curated his inner circle to only include people who share his values and goals. Rule number 5. Be fearless. Despite his incredible success, Buffett has never let it get to his head. He understands that the market will always have its ups and downs, and that the key to success is to stay level-headed and make rational decisions regardless of the circumstances. Rule number 6. Missed chances hurt more than bad calls. Rule number 7. Take your time. So there you have it. 7 rules of money from one of the world's greatest investors. I have a final rule for you that you should think about before making any investment. It's this. You don't need 500 investments in your life. You'd be better off if every financial decision came with a punch card, and you only had 20 punches for life. Meaning if you only had 20 chances to make a big financial decision, you wouldn't just throw money at every shiny object out there. Think about your own financial decisions and ask yourself, are you making the most of your punches? Are you investing in yourself and your own education? Are you only investing in things you truly understand? If the answer is no, then it's time to make a change. It's time to take control of your financial future and start making smarter decisions. You would really think hard about where you're putting your money, and you'd be able to build real wealth over time. Now, Warren Buffett has been quoted as saying, "This is the Buffett playbook. There's no secret shortcut to success." It's not come from some magical formula or a stock tip from a guy on the internet. Real wealth is built one smart decision at a time. The key is to be patient and stay focused. Don't get distracted by all the noise out there. Just stick to what works and keep punching. Have a great day. Buffett has said that the best investment you can make is in yourself. He's also said that you should only invest in things you understand. These are simple, timeless pieces of advice that can help anyone become financially successful, no matter how much money they have. So here's my challenge to you. Remember, you don't need 500 investments to build wealth. You just need the right ones. So be patient, stay focused, and keep punching. The secret to financial success isn't out there somewhere. It's inside you already. If you found this helpful, please do share this with your friends. It's free and it helps a lot. Thank you so much for watching.